Hello there, welcome back to Financial Accounting Live. In this video, we are still working on notes to statement of financial position or balance sheet. Still working on the question paper of June 21. So on this question, still working on question 4. And question reads, J. Kuma has been trading as general ledger, as general dealer and did not keep complete accounting records. Yeah, he approached you to draw up his financial position for the year ended 30 March 2019. Following balances were in his books on 30 March 2018. So we are given a list of balances that we are given there. And then beneath that, obviously, we have additional information. So if you go down, you see that we have got additional information that is following those list of balances here. So the we go to the question, see what does the question require. Go to the question, we'll see that the question reads and draw up the balance sheet for the end of 30 March 2019 and show the notes and getting answerable. But according to this video, we are only going to look at the notes, whereby we are going to look at the capital notes, and then we also look at the calculation of stock or inventory. So we're going to start with inventory. So on inventory, we are just going to check the figures that we are given for inventory. Remember, when we are calculating the notes, we are calculating the figures that we want to put in the balance sheet or statement of financial position. So we are going to use the figures that we have at the end of the year. So you'll see that in the list of balances, we have got a figure for stock that we are given there. That is trading stock that 4,000. We are not going to consider that because this one is at the beginning of the year. Remember, the following balance were in these books on 30 March 2018, or 30 March 2018 is the beginning of the year. Maybe you can just try to state the financial period that is in question. We are seeing that our financial period is ending on 30 March 2019, which means it started the previous year on 1 April. 1 April 2018, and then it ended on 30 March 2019. So these are financial year. So on 30 March 2018 is here. So that's where we've got our opening balance. So the trading stock that we are given is 4,000 is the opening. So we're going to consider that one. We can just go to additional information to see what are they saying about trading stock. That's where we're going to get our figures. On item 1, according to physical stock taking the stock to the value of 60,000. So this is our stock that we have. So we can just go to the notes, and then also we have our stationery on our 730 on hand. So this becomes our consumables. Is in the form of our stationery. So you'd see that these are the stocks that we have at the end of the year. We've got 60,000 in the form of trading stock, and then we have got stationery 720. So we're just going to add the two to get the total for our stock at the end. So if you come to our answer section, we are going to just put down those figures so that we calculate those the final figure for stock. So what we are saying is we are going to have the figure for stock that we are going to put as a total in this column, and then we can just add the figure for trading stock. And remember, figure for trading stock that we have. Let's just try to go back to see the actual figure. We are giving after a physical stock taking, the value was 60,000, and then we got 720 for stationery. So simple as that. Just go and put those figures. So here we are saying we have 60,000, and they are portrayed. This one is for trading stock, so we're going to put it here. 60,000, and then we also have for stationery 720. So as simple as that. So you get the two, you get the total, which is 60,700. So this is our note that we have for stock. Then obviously we also have a note that we want to prepare for the capital note. For the capital. So if we come here, you would see that this is the note that we are having. So at the beginning of the year, that's where we're going to start, and then the total for the capital, we're going to put it in this column with 9 with capital. So we start with the balance at the beginning. So we go back there to check what's the capital balance we have at the beginning. Remember, the figures at the beginning are given there at the start of the question. Come here, you see that we are given capital, it's 90,000. So it means 90,000 is going to be uh, our open. Let's try to see in terms of our open. So you see that the table that we are given here is indicating our summary of the statement of financial position of the balance sheet of the previous period. So what we are saying is that capital that we are given here, we are given this one was the calculation of capital. This was the opening for the previous periods, and then net profit was added for the previous period, and then we have got also our drawings being subtracted. So it is the final figure that we have for this for the previous statement of financial position is 108,000. And this balance that we are given, remember, is on 30 March 2018, implying that this is at the beginning of the year, which is 1 April. So our opening is going to be 108,000. So we are just going to put 108,000 as our opening. So if you come here, let's say opening balance at the beginning, we say 108,000. Then we add our additional capital. Remember, we have got a narration of our additional capital that we have there in the additional information. So we are just going to go down to see what we have in terms of additional. On item 6, the order made an additional capital contribution of 10,000 rands on January 2019. It took 15,680 yes, for personal. So basically, additional capital, we have it here 10,000. Then this one, 15,780 becomes our drawings. So remember, whenever something is taken for personal use, it's drawings. So we are going to just put those as our substitute for the figures that we have there. Then we come here that we are saying additional capital, we are saying it's 10,000. Remember, when it's additional capital, we add, and then when it's drawings, we subtract. So on all the drawings parts, we are just going to subtract. So drawings is here, we are saying drawings, we got it as 15,680. So we have drawings, we are subtracting. And then the figure for net profit, we are going to check it again. The question, so if you find here, if you come here, you see that so if you go through the additional information to try to find anywhere where we are given the figure for net profit, you can always find it in the additional information. We see that we also have another additional information that we have there, which is saying right of depreciation of vehicles 50% per annum on domestic balance. So it means we are not given the figure for our net profit for the year. So what does it mean? It means we are going to find that figure as a balancing figure. But if you look there in the answer section, you'll see that the figure for final capital in the answer book is given as pre-entered. Figure for our final capital is given as pre-entered. So what we are saying is this figure for capital here in the answer book is pre-entered is 181,283. So you can always find the figure for net profit as a balancing figure. So what we are saying is if you are given it as 181,283, it means this figure you can easily find it by saying 181,283. We add 15,680, then we subtract 10,000, subtract 108,000. In other words, what we are saying is we can just present it maybe in the form of a formula so that it becomes simple. Remember, this formula is saying our opening capital is our capital at the beginning. You add the additional capital. You subtract your drawings. You add your net profits. Get your closing capital. So this is exactly as that. So the figure that we are looking for is the figure for our net profit. So you can just make it the sum of the formula there. So you see that if you make it the sum of the formula, you are going to say our net profit is equal to our closing capital, subtract the operating capital. Remember, when we take it to the other side, I change the side, subtract the operating capital, and then you subtract again additional capital, and then you add your drawings. It's simple as that. So this is exactly what we are doing there. So we are saying closing capital 1,283. We enter our drawings 2,780. We subtract our additional capital 10,000. We subtract again our operating capital 108,000. Then the figure for net profit there that we are going to get there is 78,963. So this is what we have, guys, according to this video. And also, if you're subscribed, please subscribe and share. We are still coming with more videos as we prepare for exams. As for this video, I'm signing out. We meet again in the next video.